What's up, sons? Hello and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I want to thank everybody for stopping in today. We will be, after this show, moving on over to twitch.tv/blindrun, and we will be discussing some significant changes to the channel. But suffice to say, over the next 2 weeks, we will probably not be doing any videos except for the ones that are obligated to do by essentially sponsors. And then I will probably be phasing out for a while because I just don't have time to do it. As some of you guys may or may not know, I'm in the middle of a divorce. I have 2 failing businesses and I am starting a full-time job. So, there you go. Today, though, let's talk about crypto news because it's looking rough. Lots of stuff obviously going on with FTX. We're going to kind of go through this. So, essentially, we have Bitcoin inflation hedge narrative as an opinion piece that I do want to talk about at the end of this because there is this idea that's been floating around for a long time that is like buy Bitcoin, hedge against inflation. That doesn't appear to be proving out to be true a majority of the time, right? And then we see things like this happen with FTX and so on, and the markets get crushed, right? So TRX momentarily surges 4,000% on FTX after Justin Sun emerges as latest would-be FTX savior. Take that with a grain of salt. We're going to get into that. Nearly $1 billion of Solana is set to be unstaked in the next 24 hours. Get ready for that crash. And the contagion from FTX's insolvency goes global, and Bitcoin miners prepare to capitulate. I don't know that I have any good news for you guys today. Crypto.com exchange suspends withdrawals on Solana blockchain as crypto prices crash. And Tether freezes $46 million worth of USDT following law enforcement request. I got nothing but FUD today for the most part, other than Caspa, which Caspa just got listed on CoinEx and it is up pretty significantly. So, you know, we've been pretty bullish on Caspa for a while. It's still a little weird. You got 62% of people selling it and only 37% of people buying it. That is pretty typical, though, when you get an exchange listing, because obviously more people need to be listing before people can start buying. And Hopstare is partnering with Flux Labs, so we'll be talking about that as well as the mining potential. I'm going to run the ad for the day. And I didn't prepare a new ad. I do have one to prepare, but we'll talk about that company over on Twitch a little bit later. Today's sponsor is myself. To support the channel, click the join button below the video and you will get access to our privately hosted Rocket Chat. Selecting the $1.99 option will get you access, and after that you need to head over to the membership tab, scroll down, and expand out your membership perks. Find the section for connecting on social media, and in that section there will be a secret registration URL to join Rocket Chat, where you can sign up to enjoy talking with other cryptocurrency enthusiasts and miners without spammers, scammers, or bots. And welcome back to the stream. If you guys want to support the channel, that's one of the ways to support the channel. Another good way is checking out sonofatech.locals.com. We'll be talking about that and some other plans for the channel revolving around both Rumble and Locals a little bit later over on twitch.tv/blindrun. But for now, let's get into the news. First things first, Tether freezes $46 million of USDT following law enforcement request. Tether has received requests to freeze assets while investigation occurs. Stablecoin issuer Tether has frozen $46 million of USDT on the Tron blockchain following a request from law enforcement. Quote, we are starting to receive requests from LE to temporarily freeze assets while investigations occur. End quote, a Tether executive told CoinDesk. USDT fell 3% from its $1 peg earlier today as contagion begins to spread following FTX's decision to halt withdrawals. It's currently returned to its fraction below $1. So here's the thing that we got to talk about for Tether in general is that the contagion really starts with FTX. And then that bleeds over into Solana because Solana is basically centralized trash backed by FTX. And that is where a bulk majority of the issues with Tether are going to come from, is going to be on the Solana blockchain. However, now with this coming to light, it does look like Tether is in additional issues or additional trouble outside of just the amount of Solana on USDT, or the amount of USDT on Solana, but also now the amount of USDT on Tron, because that is being frozen by law enforcement, which is definitely going to make things look worse and worse for Tether. There is, I suppose, in general, potential for USDT to decouple and stay decoupled. Will it completely collapse? You know, I mean, like what we get down to yesterday, 97 cents. So is how far it decoupled. It's back to pairing today. I don't think it's necessarily a huge problem with Tether as much as it is a huge problem with Solana, but it does affect it, right? And that's affecting other exchanges too. So when we talk about Solana, we have to consider the fact that Solana is being traded on other exchanges like Crypto.com. So Crypto.com exchange suspends withdrawals on Solana blockchain as crypto prices crash. Another exchange in trouble. They asked the question, I don't know that we could really say that Crypto.com is necessarily in trouble here. I think it's more that Solana as a network is in trouble. But yes, because of contagion, etc., there could be issues there. And as you guys know, I used to be sponsored by Crypto.com, and I can tell you that they are to the point to where they cannot really even afford content creators that are, frankly, extremely cheap. I am an extremely cheap content creator. You know, we sell ads for like $100 over here. In an email to users on Wednesday, the platform reportedly said that they are suspending deposits and withdrawals of USDC and USDT on the Solana blockchain effective immediately. The note did not mention the exact reason for the move. However, it said stablecoin withdrawals and deposits in other blockchains like Ethereum and Kronos would resume normally. In a Thursday tweet, Crypto.com CEO Chris Marsalek said the recent developments around FTX and Alameda Research, which are two of the biggest backers of Solana, led to the decision. I mean, no Sherlock, right? Quote, FTX was an important bridge venue for Sol-based stablecoins. We do not want any additional risk to our users coming from this area, hence disabling it. Marsalek added that other chains are operating normally. As reported, FTX, one of the largest cryptocurrency exchanges, has been hit with a significant liquidity crunch. Initially, Binance signed a letter of intent to acquire the failing crypto exchange, but backed out of the deal, saying issues are beyond our ability to help. The news further exacerbated the crypto market crash, and Bitcoin, the world's largest cryptocurrency, tumbled as low as 15,682, a level not seen in 2 years. Ethereum also dropped to $1,083, down by around 4% over the past day. And Chris Marsalek pushes for more transparency. Here's the deal, guys. And I like, in my humble opinion, these failures need to happen. The centralized exchanges and so on have to fail. They have to get pushed out. And I don't think that the answer here is going to be regulation. So there is going to be like clearly transparency I can agree with. But we have to be careful because a lot of what this is going to be utilized to do is push for regulation. And I also want you to look at the type of people and who was pushing for regulation previously, right? Sam Bankman-Fried was one of the biggest proponents of regulation. Why would that be? And then if we talk about some of the weirdness coming out from the political scene right now, surrounding dealings with regulation and lobbying and so on. I'm going to be working on this to get it out to you guys soon, but there does appear to be, and I was trying to find the tweet here, there does appear to be some sort of connection between Gary Gensler and SBF, Sam Bankman-Fried, and FTX. And now he's using this essentially to push for more regulation. So pay very, very close attention to what Gary Gensler is doing now. And then I think somebody that's really good to follow as well would be Representative Tom Emmer. And he's kind of tracking a lot of this from the political side of things in the U.S. And I think it's going to be really important to pay attention. So in a bid to address this skepticism, Marsalek said that crypto exchanges should publicly share proof of reserves. And this is something that's been coming out. And there's a lot of people that are proponents for this. Proof of reserves for exchanges, Binance would be one, Crypto.com would be one. A lot of the exchanges that are current, I believe like KuCoin as well. A lot of these exchanges are talking about doing proof of reserves, which they would put out. Now, my perspective, let the centralized entities fail. We have the tools to be transparent within decentralized finance. And the thing is these, obviously there's a lot of money in this for the centralized exchanges and so on. So they're not going to give up easily and just fold, right? But the only real thing that you need in a big exchange for, a centralized exchange for, is basically swapping into fiat currency. There's no need for, essentially at this point, centralized exchanges, or a lot less need for centralized exchanges. So when I say like this is kind of a necessary thing to happen across the board, I do think we end up, and look, everybody always calls me crazy. I think that banks will fight the federal government over CBDCs, but eventually will be obsolete for the most part in like the next 50 to 100 years, right? I think that eventually all centralized exchanges fail and the nation state or fiat currencies in general fail, and everything centralizes around some sort of digital currency. And as a result, you will not have any need for centralized exchanges either, because centralized exchanges essentially are just banks. So I would also presume that centralized exchanges go away before anything else. My assumption would be you end up with a CBDC that is running your middleman conversion between whatever cryptocurrency you're participating in and that CBDC, right? That fiat, basically, version of digital currency. He went on to say, quote, "This is a critical moment for the entire industry. Transparency is more important than ever, and safety and security of users and funds remains the priority. It requires full and collective commitment." However, some users suggested that sharing proof of reserves alone would not be enough. It is also important that crypto platforms do not trade with users' funds and be transparent with where the yield comes from. And this is also just like, it's a little bit of comedy. Like if you step back and you just look at this like completely objectively, it's like all the exchanges are doing is exactly what the banking industry has been doing for essentially ever, right? The only difference being is that there's not as much government oversight, and there isn't a daddy government to come in and basically bail out the crypto exchanges like they do with the banks when they up, right? So the only difference between a centralized exchange for cryptocurrency right now and banks is that the federal government isn't coming in and bailing them out. That's pretty much it. Other than that, you can consider them the exact same thing. That's why I say first centralized exchanges will become obsolete and then banks eventually. The contagion from FTX's insolvency goes global, and that is as Bitcoin miners prepare to capitulate. This one's interesting because it's a perspective coming from WCCF Tech, which is typically not a cryptocurrency news outlet, but it was one I saw and I like hearing from them. I want to hear what they're talking about as far as the mining perspective of this. The article goes on to say the embattled crypto exchange FTX appeared destined to become insolvent yesterday when Binance declined to infuse some much-needed cash into the ailing entity, dragging the entire crypto sector as well as high-beta U.S. growth stocks into the proverbial shitter. While a ray of hope for FTX has since then emerged, the underlying dynamics for Bitcoin and other cryptocurrencies continue to deteriorate as negative momentum is now unleashing a cascade of second-order effects. Let's start with the good news. Justin Sun, the founder of blockchain-based entertainment-focused digital platform Tron, has tweeted that his firm is currently working with FTX to come up with a solution to the exchange's liquidity shortfall and devise a pathway forward. Sun went on to note in a separate tweet that, quote, "My team has been working around the clock to avert further deterioration. I have faith that the situation is manageable following the holistic approach together with our partners. Stay tuned," end quote. Before discussing how Bitcoin is affected by this, let's go over the basic facts of the FTX saga. For those who might be unaware, FTX essentially suffered a bank run when Binance announced to dump its holdings of the FTT token due to the outsized exposure that Alameda Research, the trading arm of FTX's founder Sam Bankman-Fried, maintained to this synthetic coin on its books, which, according to Binance, amplified the risk around the FTT ecosystem. Bear in mind that FTX incentivized its users to hold the FTT token by offering attractive discounts on trading fees, along with a host of other rewards. Now, this is also important to note because there is another exchange that currently does this, that implements this specific strategy. And I think it's important to talk about like the types of exchanges that implement these specific strategies, but Crypto.com does this with their Crow token. And so I think like as far as Crypto.com goes, getting some transparency in there to understand how much of that and where it is and how it is entailed would be important. You know, to just even have a Crypto.com card, you have to have basically exposure to Crow. And that's been something with the card. Obviously the card works really well. I utilize it even still to this day. It's pretty much out of money, but I bought a steak with it the other night. Sold the last of my Polygon right before the crash, actually, to buy a steak. You can check out that tweet on Twitter at Son of a Tech and follow me over there. But yeah, that's what, you got to be careful because there are these exchanges that do that. And there's a lot of exchanges that have their own token. In my humble opinion, I don't think that having your own token as an exchange is necessarily, confidence inspiring, and I don't think that it definitely, or I know for sure that it definitely shouldn't be make up a bulk majority of your basically reserves at all. It probably shouldn't even be a part of your reserves at all, at least from my perspective. So just pay attention to it, right? Especially as we get more transparency across all of these exchanges. Bear in mind that FTX incentivized its users to hold it, so the exchange maintained FTT's value, but by using a third of its trading commissions to buy back FTT coins, which were then burnt. In reality, FTX and Alameda were running a Ponzi scheme where Alameda was able to acquire FTT coins at very cheap prices through pre-mining, etc., while FTX artificially inflated the coin's price via regular burns. And, let's just... all the elephants in the room, it's getting fucking crowded in here, boys. If we're going to talk about manipulating currencies that are proof of stake to artificially increase the price of the token, we have to point out that that's exactly what Ethereum is essentially doing, right? Along with the pre-mine that was given to essentially a select few people that are, in the know and in the circles with the devs, you are talking about not like basically FTT failing, and you can dump all over them, but the exact same practices the FTT or the FTX was using with FTT are the exact same things that Ethereum has been doing as well. Okay. And that's just the fact of the matter. So like I said, like hopefully these elephants don't start farting, because it's going to be rough in here. These clients' funds were used by Alameda to place leverage bets. However, the gameplay ended when Binance's decision to dump FTT unleashed cascading liquidations that pummeled the coin's price. With Alameda's collateral crashing and FTX experiencing elevated withdrawal requests, the exchange has found itself on the brink of bankruptcy. FTX now needs cash infusion of around $8 billion to remain solvent. The exchange has also paused all onboardings and withdrawals. It was the fear of contagion that unleashed the initial lower leg of the price of Bitcoin, and these fears remain justified. Zero Hedge has compiled a comprehensive list of entities with exposure to FTX. For instance, Sequoia Capital has now written off its $210 million stake in FTX. Other investors include the Japanese giant SoftBank, Singapore's Temasek, BlackRock, I'm not sad about that one. Ontario Pension Fund, Tiger Global, Circle, Paradigm, Ribbit, Multicoin, Van Eck, Thomas Bravo, Alan Howard, etc. All of these entities will have to write off their FTX stake in the event the exchange goes under. As other manifestations of contagion, Solana is getting hammered, which we were just talking about earlier in the show, due to its close association with Sam Bankman-Fried. Moreover, Tether and Tron stablecoin USDD have lost their $1 pegs. Of course, Tether is back to its $1 peg today, by the way. Bitcoin hit the $15,000 price handle yesterday. It's back over $17,000 right now. Bitcoin's price has now fallen below the average electrical cost to mine the world's premier cryptocurrency. Three depressed prices are creating acute pain for Bitcoin miners, who now face the difficult choice of either shutting down operations or dumping their Bitcoin holdings just to keep the lights on. The fear continues to grow that a broad-based miner capitulation will send Bitcoin into a tailspin, forcing the currency down to $13,000 price level. Some now suggest that Bitcoin can go even lower, perhaps $10,000. I personally call bullshit on that. I think that we're going to still sit around the $18,000 to $24,000 range. Obviously, we're going to have volatility there, and this isn't financial advice. And I think we're going to sit here a lot longer than people want to sit here. Now, we have talked about, of course, all the trading analysis, the rubber band being stretched, causing huge spikes up or huge spikes down. We've been talking about all of that. We've talked about the, and you can go through and listen to all the episodes and get my thoughts on, how the macroeconomics are playing into this, how Russia investing in power to mine Bitcoin in Kazakhstan is affecting this, how the BRICS currency and the joining up between China, Saudi Arabia, Brazil, and Russia to create a secondary reserve currency to compete with the US dollar will affect this. This is also why later in the show we're going to talk about, is Bitcoin a hedge against inflation? Because the fact of the matter is that on a global scale, we're dealing with essentially massive inflation, huge issues with supply chain, and basically a proxy wars via every single aspect, even surrounding cryptocurrency, that seem to be being ignored by a majority of the media, including, and I think most importantly, like I said, the proxy mining that Russia is doing through Kazakhstan for Bitcoin, as well as the BRICS currency coming up as a reserve currency, a secondary reserve currency. And then you go even further and you can talk about Saudi Arabia's deal with China potentially taking, essentially Chinese yuan for oil, which would decrease the value of the US dollar as well. And you end up in a position where, Bitcoin does look a lot better than, your fiat options, even with all of this going on. And Bitcoin's really important too, because if we look at everything that's going on, we could point to any Bitcoin maximalist and they're probably saying, hey, I was right. And you got to be like, yeah, you were right. We get it, right? You know, control your own keys, be able to transact without any exchanges. Find people who are going to accept Bitcoin directly for things like food and so on, and go that direction. You'll be early, right? And that's not financial advice. That's just what I'm thinking as I go through a lot of this. These fears are already having a sizable impact on countries such as El Salvador, which maintain elevated exposure to Bitcoin. Consider the fact that the yield on El Salvador's 7.75% 2023 bond just hit the highest level since the early summer crypto exchange carnage. This is despite the fact that China has reportedly offered to buy all of El Salvador's foreign debt, which you want to pay attention to as well. Today's situation is similar to Bitcoin's previous cyclical lows that were created as a result of the fallout from Mt. Gox and BitMEX sagas. Exchanges going under have become a predictable hallmark of a cyclical bottom for Bitcoin. And kudos to WCCF Tech here. They're completely correct. You know, a lot of people want to act like this time's different than every other time. And it's like, no, it's not. Is it difficult? Yeah. Do I have to go back and get a job and I can't, you know, sustain myself on talking about crypto and mining and putting out content and so on? Yeah. But are we really any different than we were last time? No. Is this cyclical? Yes. Are we going to see a bull run again? Yes. Not financial advice. Just telling you guys, this is the third time I've seen it and it looks the exact same. There isn't really much of a difference here, other than the global macroeconomic effects and blah, blah, blah. Sure. But that's what makes this weird, is as far as the cyclical nature of Bitcoin and what happens every time, that's the exact same. So like real life is changing a lot, right? Like all the other stuff, outside factors there. But as far as Bitcoin, it's pretty much doing what we would expect it to. Crypto markets in general. So there you go. That's the end of this. So it does say this line of thinking is now inviting a buy the dip mentality in Bitcoin, as illustrated in Santiment's tweet above. Where do you think Bitcoin's cyclical bottom lies? And that's a question for a lot of people. Personally, like I said, I think that we'll recover to somewhere around 18,000 and probably stay there for another like 6 months to a year. Just chilling, bro. Just chilling. It doesn't matter either because I don't do any trading. Nearly $1 billion of Solana is set to be unstaked in 24 hours. Now, this is going to be a problem because as it unstakes, obviously this means that people will have essentially Solana available to be sold. And I would presume in the next 24 hours, you'll see a significant dip in the price of Solana. Sol, worth nearly $1 billion, will be available to be unlocked on Wednesday. This represents 13% of the coin's circulating supply, and this will be the second largest token unlock of Solana in the terms of the number of coins being unstaked by validators. And that's probably a distinction being made because it's important to note that essentially Solana is not worth near as much as it has been in the past, meaning that it is the second largest token unlock of the amount of Solana, but not the amount of US dollar. Solana validators are scheduled to unlock 49.6 million Solana, worth $945 million US dollars, when the current epoch ends in less than 24 hours time, representing 13% of the coin's supply. It's the second largest volume of tokens to be unlocked in any Solana epoch, and it is coming amid a time of considerable tumult in the crypto market. An epoch refers to a number of slots like blocks on the chain and takes around 2 to 3 days. Data from Solana Compass shows that Epoch 370, the current Solana network epoch, is set to end at around 8:30 a.m. UTC on November 10th. Solana epochs refer to a time period, usually 2 days, when validators lock in their stake on the network. Validators can choose to unlock their stake at the end of each epoch. The website's dashboard currently shows over 47 million SOL tokens scheduled to be unlocked by validators. This number has increased from 18 million in the space of a few hours. The increase likely indicates that more validators are choosing to remove their staked tokens from the network. In contrast, only 1.8 million SOL, $36 million, is scheduled to be staked at the end of the current epoch. Basically meaning that you're going to only see 1.8 million go into the network for staking, and you're going to see 49.6 million come out. That is not a very good ratio at all. And this is a sign that people are getting prepared to dump their Solana. And that is honestly, and from my perspective, an understandable move considering the relationship to SBF and Sam Bankman-Fried, obviously. Now, how is this going to work out in centralized exchanges? Well, it's not looking good, right? We already have Crypto.com blocking withdrawals of Solana. Crypto.com is going to make it, and anything on the Solana network, right? So Crypto.com exchanges, centralized exchanges are going to make this extremely difficult to do and facilitate as usual, as per usual. The powers that be will prevent you from protecting your investments because that's what they got to do to make sure that they protect themselves first. And that is like the biggest takeaway from all this, is like realizing that all these people that work within crypto, just always remember that like they have their own self-interest in mind before you at the end of the day. And if you are allowing them to control, and basically hold your cryptocurrency for you, well, just remember, that's like basically right now giving your $20 bill to a homeless person and hoping that you can come back and get it back from them. Like, that's not happening, bro. They're broke. They're going to protect themselves. Like, it's stupid. Don't give them your money. It's crazy. Now, we should also talk about Helium as well, because Helium did HNT here a couple months ago, got off their own network and moved over to the Solana network. So Helium will be impacted by this as well. And so if you are a Helium miner, you may want to take a look at what's going on with Helium as well, and make sure that you are prepared to try to figure out how to liquidate your Helium. Right now, I believe it's up in price. Yeah, Helium is up in price right now, as you can see here. But there is a little bit of contagion that you want to be aware of between the two projects. TRX momentarily surges 4,000% on FTX after Justin Sun emerges as the would-be FTX savior. We kind of covered this a little bit, but Justin Sun offered a way forward for embattled exchange FTX. Tron Network's native TRX token momentarily surged some 4,000% from 6 cents to $2.50 on embattled crypto exchange FTX, even though they exchange hands for 6 cents on their prominent exchanges such as Binance and OKX. Tron-based assets such as BTT, Sun, and JST rocketed higher as well, trading for several multiples on FTX in contrast to other coins or bourses. Actually, I don't know what this is. So we're going to go ahead and do my classic Google it and learn a new word. How do we pronounce this? Bourses. Stock market in the non-English speaking country, especially France. The Paris Stock Exchange. It's not a result of the repetitive fat finger trades, nor have FTX traders gone euphoric on TRX. The high prices are a sign of hope, a hope that Tron-based assets will be redeemed on a one-to-one basis by Tron founder Justin Sun. Traders on FTX at the time of writing cannot withdraw any assets from FTX, and trading accounts are selling for pennies on the dollar. But TRX could be a way out for some crypto hopefuls. Earlier during the day, Sun offered a way forward for FTX, which receded into insolvency following the aftermath of a CoinDesk report stating that the ongoing liquidity crunch was harmful to the industry development and investors alike. And unfortunately, this is what we're going to see a lot of this. We've already been talking about we're seeing a lot of it, right? Binance founder Changpeng Zhao was earlier the front runner to take over FTX, but that deal fell apart after scrutiny of FTX's books. This followed on another Sun tweet yesterday saying, quote, "We will do everything we can to protect our users, including exchange all TRX, BTT, JST, Sun, HT on the FTX platform at a 1-to-1 ratio," he said. Sun's play is to attract and honor Tron-based assets like BTT and Sun, as well as Huobi's native HT tokens stemming from FTX. The move allows for large traders to liquidate some of their holdings while improving sentiment for the Tron ecosystem. The sentiment was quick to improve. The trading of TRX and related assets was restarted on FTX in Asian hours on Thursday, moving prices to over $2.50. Prices corrected to 32 cents as of writing time, hours after Sun's tweet, and still trade at about 400% premium compared to other exchanges. But keep in mind that if you put money into FTX, you can't get it out. So cool, it shot up to $2.50. If you sold, well, good luck on getting any of your funds out, right? That is kind of the problem here. Very weird. Also, just, every single time I see Justin Sun in something, then you know that it just feels like there might be something scammy going on there. So like I said earlier, I wanted to talk about Bitcoin and inflation and the hedge narrative that surrounds it. This is going to be via an opinion piece on CoinDesk, and I think it's important to basically keep our ears to the ground, nose to the grindstone, ears to the ground, everything. Work hard and pay attention as much as possible if you can. So this topic, obviously, we want, the idea was the 2008 financial crisis spurred on the creation of Bitcoin, which was intended to prevent or protect individuals from another 2008 financial crisis. Good news is that we get to test that theory. Bad news is it might be a little bit too early to test that theory. What do I mean by that? Obviously we are going through some sort of financial crisis. If you don't think so at this point, I don't know what to tell you. I guess cool. That being said, Bitcoin has not fully matured yet either. We still have let's just go back through it, right? We're seeing collapsing of centralized exchanges. We still have basically a hybrid environment for cryptocurrency and fiat systems. And we don't have all of the systems worked out and put into place for the digital transformation to fully take form. And if the digital transformation for finance has not fully taken form, is it fair to say whether or not Bitcoin is successful as a hedge against inflation at this point, right? Does that make sense? So you have to wait for the technology to fully mature before you can fully vet it out and test it. And my argument would be that Bitcoin is not fully matured at this point, or cryptocurrency in general, right? Whether or not Bitcoin and other cryptocurrencies are long-term inflation hedges and a store of value, or simply a risk-on speculative asset preferred in times when bond yields are unattractive, is yet to be perfectly understood. For nearly a decade, crypto investors and advocates have promoted Bitcoin as a hedge against inflation and a store of value against fiat currency. Now, in general, that's been Bitcoin maximalists. I think broader market observers have not, stated that ever. The best that's been stated was a risk-on asset by JP Morgan. Due to the tokenomics behind Bitcoin, many savvy investors believe that Bitcoin is a hedge against the loss of purchasing power experienced in many fiat currencies. Now, Bitcoin is not proven to do that, right? But crypto has proven to do that via stable coins in Argentina. So, what that tells me is technically cryptocurrency has that capability, and therefore Bitcoin does have the capability to act as a hedge against inflation that is spurred on by governments. However, it doesn't mean that currently is what's going to happen, right? If that makes sense. Bitcoin has a fixed supply of 21 million Bitcoin. The issuance rate of Bitcoin is known by all market participants, and the Bitcoin blockchain will eventually reach a state of 0% inflation once all the Bitcoins have been mined. Many investors and Bitcoin advocates believe that this economic design makes the cryptocurrency far superior to other permanently inflationary cryptocurrencies and fiat currencies. There is the flip side of that, which says that it's for people to function, you need an inflationary currency. This is the argument for Dogecoin, just so that you are aware of where that comes from. The value of fiat currencies is determined by governments and central banks for over a decade. The U.S. Federal Reserve has had an inflation target of 2% for the U.S. dollar. Another way to think about inflation is the purchasing power of the dollar decreasing. As currency inflates, the purchase power of the currency declines over time. On one hand, many economists believe that by creating an inflationary currency, they can spur economic growth and encourage spending in the market, which they believe strengthens the economy and business cycles. On the other hand, many other schools of economics do not believe that a loss of purchasing power in an economy's main currency is beneficial to the long-term health of an economy. This disagreement and contrarian belief has led many to adopt and hold Bitcoin, among other cryptocurrencies, as an alternative to fiat currency. Bitcoin has certainly outperformed fiat currencies over the last decade, but while many fiat currencies were stable over the last decade, Bitcoin's price was not. Bitcoin has become incredibly popular around the world, has been adopted and used in large parts of the global economy, and has seen a very impressive growth rate. Bitcoin is trading under $100 a coin in 2012 and reached an all-time high of nearly $70,000 in 2021, under a decade later. The performance of Bitcoin over the last decade served as further evidence of the asset being a hedge against a fiat currency devaluation and strengthened its store of value investment theory. In 2022, however, it had been a different story. Beginning in 2022, the U.S. Federal Reserve began to raise interest rates and pull liquidity out of the market. Spurred by record high inflation, the U.S. Federal Reserve took these extreme measures in order to combat inflation in the economy. By raising interest rates and decreasing market liquidity, the Fed caused assets like stocks, bonds, real estate, and even cryptocurrencies to see tremendous headwinds. U.S. stocks are down over 20% year to date, bonds are down over 30%, real estate is down over 15%, and cryptocurrencies are down over 60% so far this year as of November 2022. Many traders describe the market we're seeing in 2022 as a risk-off environment. U.S. Treasury bonds are considered the safest investment in the world, often described as risk-free rate. These bonds provide investors with a guaranteed yield and protection of principal. Because the Federal Reserve has raised interest rates significantly this year, the risk-free rates of U.S. Treasury bonds are higher than they have been in over a decade. Many investors see this as an opportunity to invest in government bonds, and consequently, they have been purchasing and investing in government bonds over other assets like stocks and crypto. In fact, individuals were so eager to invest in these bonds, and the web traffic of people visiting the Treasury Direct website was so high, the website couldn't handle the traffic and crashed. Bitcoin doesn't crash, boys. As the market shifted from a risk-on environment where bond yields were low enough that individuals preferred a more speculative asset allocation to a risk-off environment, cryptocurrencies have underperformed many other assets. This underperformance has led many crypto critics to state that the inflation hedge and store of value thesis behind Bitcoin have been invalidated. These individuals believe that cryptocurrencies are risk-on assets. In other words, when the risk-free rate in the economy is low, and the US government bond yields are trivial as they were for most of the last decade, investors will flock to assets like stocks and cryptocurrency where the potential return is much higher than its bonds. When the market is a risk off, market participants believe investors will flock to bonds over speculative assets like crypto. While cryptocurrency is still very young compared with other asset classes, these markets are helping individuals understand the driving investment thesis behind cryptocurrencies. It is important to understand that all the nuances that go into global markets and investment allocations and know how to pivot when the market changes. There's never been a time in Bitcoin's existence where the risk-free rate has been this high. And the eventual outcome will be very helpful for investment managers in the future. Whether or not Bitcoin and other cryptocurrencies are long-term inflation hedges and a store of value, or simply a risk on speculative assets preferred in times when bond yields are unattractive, is yet to be perfectly understood. This year has been significantly different than most of the last decade, and the market we are currently seeing will be very beneficial to advisors who wish to better understand this new emerging asset class. So unfortunately, I think this opinion piece covered a lot of really interesting topics, but didn't really give us the answer to whether or not, they think, which is an opinion piece, so I was expecting to hear what they think about the idea that Bitcoin is a hedge against inflation. I think it's safe to say, as it sits right now, you would say that, because of the cyclical nature of Bitcoin, it is not, and because of the tie into what's happening in the rest of the economy right now, it would not be considered, a hedge against inflation. That being said, the cyclical nature of Bitcoin also would lead me to believe that it should be currently at the price that it is sitting at. Well, maybe a little bit higher, right? Maybe like 18 to 24K. Sure, that's what I always say. So maybe a little higher from the 17,810 than it currently is. But nothing too shocking has actually happened. Yes, there's volatility of the quick drops down to 15K and then coming back up. But it keeps continuing to settle around the price of minting a Bitcoin, which is kind of what you would expect to see. So as far as it is concerned, if I look at it completely objectively, I would say that it's not a hedge against inflation in its current state. I would, however, also follow that up with pointing out, of course, like we did at the beginning of this article, that there is proof that there are ways to utilize cryptocurrency to hedge against inflation. However, right now, that hedge against inflation is based on the US dollar. Then I would also say, of course, from that perspective, that you do have to worry about the US dollar losing value to another reserve currency like BRICS. So there's a lot changing in the world right now. But as far as Bitcoin being a hedge against inflation, I do not think it necessarily is at this time. But with more maturity, I do think that there is a viability for that to be the case. Let's talk about some releases or launches, I suppose. Caspa, one of my favorite coins, new coins, I should say, that's been floating around for a while, is available on CoinEx now, and it is trading at 4.2 tenths of a penny, which is pretty good. I think we got a little nice bump out of Caspa thanks to this listing, and we will confirm that a little bit later on CoinMarketCap. Before we get into mining profitability for the day, I will run an ad. I want to remind you guys to go ahead and hit that like button, share the stream out, because it's pretty clear. I don't know if it's suppression, lack of, I know that there's a lot going on. Lack of interest in the market due to the prices being down. A little bit of suppression by YouTube because the content is, of course, cryptocurrency, and they have reduced the amount of information on cryptocurrency being pushed around on the platform. So there's a lot going on. I need y'all's help for sharing out the channel. Yes, I'm going to be okay. Yes, I have a day job. Yes, we are going to be reeling back the amount of content that is on here, but that doesn't mean that I'm quitting, and it doesn't mean that I don't want to have some sort of success on the platform. You always want to keep pushing and keep trying, right? So thanks everybody for the support though, and for hitting that like button when you do, and hitting that share button when you do. It means a lot. Now, let's talk about yeah, mining profitability right after a word from yours truly.
Today's sponsor is myself. To support the channel, click the join button below the video and you will get access to our privately hosted Rocket Chat. Selecting the $1.99 option will get you access, and after that you need to head over to the membership tab, scroll down, and expand out your membership perks. Find the section for connecting on social media, and in that section there will be a secret registration URL to join Rocket Chat, where you can sign up to enjoy talking with other cryptocurrency enthusiasts and miners without spammers, scammers, or bots.
All right, and welcome back, ladies and gentlemen. So let's take a look at the mining profitability or lack thereof at 10 cents a kilowatt hour for an RTX 3090 with corrected ZIL hash, Capal, Prog, Pal, and Firo proof of work. You were losing the least amount of money on Caspa. Obviously, that is going to be due to the new listing on CoinEx, which is definitely pumping up the price of Caspa right now. So congratulations to those that spec mined Caspa long ago before it ever hit an exchange. You're probably feeling pretty good about today. I mean, if you're mining pre-exchange, like if I look at my bag, you know, we're talking about increases of thousands of dollars overnight thanks to Caspa. Cero is losing 33 cents a day after power, and Yoxa is losing 36 cents a day after power. Ravencoin is losing 40 cents a day after 10 cents a kilowatt hour, and Meowcoin is losing 43 cents a day after 10 cents a kilowatt hour. Scrolling down from there, Ergo is not listing up here, which is really interesting because it does say it would be the least or losing the least amount of money, the most profitable, I suppose. I don't know how we state that, but it says it's only losing 29 cents a day after power, which compared to Caspa is losing 4 cents a day less. But that's just because of the power. Excuse the alerts. I apologize for that. Those alerts are only supposed to be over on Twitch. And then Ethereum Classic is losing 47 cents a day after power. Let's take a look at the hash rates we did recently on the 6th. November 7th, we saw an increase in the hash rate on Ergo to 44 terahash a second. It's actually only down 1% over the past 7 days, so Ergo is performing quite well here recently. If we take a look at Flux, it's not quite the same story. Flux has lost 32% of its value over the past 7 days, and it has lost a bit of hash rate down to 6.75 mega solutions a second. And that is down pretty significant from yesterday by a whole mega solution a second. Ethereum Classic, if we take a look at that, is going to be down 5.63% over the past 7 days. And the hash rate has dropped off a little bit to 154 terahash a second. ETH proof of work is sitting at 30 terahash a second, also losing some hash rate over the past 24 hours. And it's down 27% over the past 7 days. Ethereum Fair is down 20% over the past 7 days. The hash rate remains pretty stable at 4.6 or 4.16 terahash a second. We will also take a look at Ravencoin, which is down 18% over the past 7 days and sits at 14 terahash a second. If we take a look at Caspa, which everybody is getting into these days, including the Red Panda miner, we are at 47 or 49% increase over the past 7 days and sitting around 222 terahash a second on the network, with 166 of that being through a mining pool. Finally, we do want to take a look at Bitcoin because changes are a brewing here. It's down 11% over the past 7 days, most of that in the past 24 hours. And it is dropped a bit. You can see this drop off here starting to happen. If I can, it's not working. There we go. And we're down to 270 exahash a second from about 285 exahash a second. 15 exahash a second offline within the past 24 hours. Pretty big deal. So there are miners capitulating. Technically, WCCF Tech is right over the past 24 hours is correct. Some of that, though, also has to do with the bankruptcies that were already in the pipeline. and some of the acquisitions that were already happening. So would I say that specifically what happened yesterday is already being realized on the Bitcoin network? No. I think that is follow through from all the miners that are basically already going bankrupt. So that's kind of my perspective on it. Let's talk about ASIC miner profitability though. Antminer L7 still most profitable. However, it is down quite a bit. It's down to $14, $15 a day. On Dogecoin, coming in second is the Jazzminer X4, making basically $13.76 a day on ETH. We have the iPolo V1 making $13.10 a day on ETH, with ETHW essentially, meaning probably dual mining Zilica and ETH proof of work. Excuse me, don't know where that yawn came from. And then scrolling down from there, iPolo V1 Classic, same thing. All the ETH miners doing pretty good, just in general, on the ETH pools. Gold Shell HS3 doing $4.29 a day after power. iPolo G1 doing $1.35 a day on Grin. And if we scroll down to the Antminer S19 Pro, we are looking at 60 cents a day on NiceHash. I think that the S19 Pro is literally negative across the board, unless you're renting it out, which means in reality it's not making any money, just to be clear. Now I do have go into dark mode. Oh man, I don't have my list pulled up for today, so we'll not worry about that and get into questions and answers. Remember, super chats are never required, always appreciated, first to be answered. And if you tag @SonOfATech, it will highlight the message orange, making it easier for me to read and respond to. If you do not tag @SonOfATech, I do not feel bad for skipping you completely and not reading your message, because look, you make it easy on me, I'll make it easy on you. That's the way it is. If you would like to support the channel directly with the most amount of money going to me, check out the pinned comment for sonofatech.locals.com. If you would like to support the channel in a manner that boosts the algorithm, please send a super chat sticker to the channel. If you would like to support the channel in a monetary way that doesn't cost you anything extra, and you have an Amazon Prime account, head on over to twitch.tv/blindrun, which we will be streaming on here in the near future, and sign up with the Prime account, which is free for you, and I get $2.50. So Gordon Murray says, you can be a weekend crypto warrior. We will be trying to figure out the schedule. I just don't know how it works out yet. My priority will still be jiu-jitsu. And jiu-jitsu has essentially 3 classes throughout the day, a 7 a.m., a noon, and a 6 p.m. Or 6:45 p.m., excuse me. And I don't get done with work until 5 p.m. Central Time. We could feasibly do drive time, 30 minutes, get back at 5:30. We could maybe start at 5:40. I don't think I have enough time to do it before getting to jiu-jitsu. So if I don't have enough time to do it before jiu-jitsu, we would have to do it after jiu-jitsu. But right now I'm having to shower at Gold's Gym. So I have to go to jiu-jitsu, which ends at 8, and then go to Gold's and shower, which takes me till about 9. We could maybe start the live stream at like 9 p.m. Monday through Friday Central Time, which would end at like 10:15. Then I can stop, get ready, go to bed, get up at 6 a.m. It's possible. Anyways, Raymond says that Summitech KA3 makes $41 a day. Yeah, I've heard the KA3 makes quite a bit. Dirt Toby says, at Summitech, I wish you the best of luck for the future. Yes, sir. Purple Viking says, at Summitech, congrats on getting the job. Thank you, good sir. El Masibi, welcome to the Suns on YouTube. Because getting a portable shower and using my own water would cost me more than the gym membership, and that seems like a dumb idea. Village says that's something that cut out the showers and we can't smell you on the interwebs. Yeah, but you'll start to see all of the ringworm and staph infection. Always shower after jiu-jitsu, boys. And use defense soap. Now says, at Simon Tech, do you still running the Casman node? Well, my power shut off at the farm. Actually, speaking of, I got 4 days to come up with $3,900. I don't know how I'm gonna do that yet. Fuck. Shit. So the nodes were off, and I haven't turned any nodes back on. Robert says, ask Simon Tech, Solana pause unstaking. Did Solana just pause unstaking? Holy shit. I don't see proof of that. Twister Box says, that's Simon Tech questions. What coin next after Ethereum? I don't know what you mean by that. It's a silly question. Because what do you mean? Do you mean adoption? Do you mean usability? Do you mean features? And if you mean price, then just get out of the channel and go watch somebody else, because we don't talk about like we talk about that, but that's not gonna like. There's no predicting that. Bot Life Gamer says, that's something like, how big is the mining farm? It's only like, my farm's only like 200 amps or so. It's supposed to be upgraded to 800 amps, but I canceled that because the power company started adding on these PCRA fees that don't make any sense, and they won't even tell me how much they are, so I can't calculate my actual cost. Purple says, that's Simon Tech, are you still holding anything? No, I mean, not really, no. Same that happens every bull run. I get liquidated and then I hold some shit coin that's not worth anything in the next bull run. Roller says, at Son of a Tech, after FTX and now Solana, if really stop staking, who is next in your opinion? Well, Helium would be next in my opinion, because Helium runs on Solana. So logically, I don't think Tether goes down. Because it's backed. I just think that it'll be a little bumpy getting it moved over. I'm not seeing any evidence for Solana stopping unstaking. All right. So, John says, that's Tech. What about near? Don't know anything about it. El Mousy says, that's Tech. Do you know of any way of studying ASIC repair online? No, that wouldn't really work. It'd be like any trade skill is not, you don't, look, any trade skill you have to have hands on, period. Is it possible for you to order your own ASIC that's broken and practice on it? Yeah. Is it the same as like buying a motorcycle and practicing on it? No. Like, that's why also I think like trade skills like in our economy are going to be extremely important. KJ says, that's something like your chair pillow sets off the OCD. I don't know what chair pillow you're talking about. The magnet one? Oh, great one says, at Summit Tech, from the miner's perspective, doesn't holding crypto support the theory that the coin mined is backed by something, i.e. time and electricity? I don't know. That doesn't make any sense to me. It's not logical. Unless you're just meaning like, because I mined it and it cost me this much to mine it, I'm not going to sell it unless I can sell for that amount. It just falls off all the time. So the kids throw it around. It doesn't really work very well. Secret Lab has really expensive chairs that are too expensive for what they do. But at least it's a Superman chair. All right, boys, we're going to move on over. Well, we have, yeah. Move on over to twitch.tv. That's what we're about to do. Botlife says, Caspa is offline with Trade Ogre. Is there something going on? No, it's being traded on, it got added to CoinEx today. That's all I know right now. Check their Discord. Let's move on over to twitch.tv, and I'm going to play some Call of Duty. We'll talk a little bit more about what the future plans here for the channel are. So if you're interested in that, we'll be doing that over on Twitch.